Macro environment we really describe as stable right now, and I don't think investors really believe that yet. And there's really two elements on that. One, OPEC. OPEC is now kind of the market defender for oil prices. They are not going to let supply get out of control. And then secondly, we've actually seen U.S. oil production, which has really been the main culprit for low oil prices. Production took a step back in January. The rig count now is sliding to a really high degree. We're down year over year in the rig count. So maybe that U.S. production growth isn't going to just continue to, slap us around with its growth.
And you mentioned last time that Cabot Oil and Gas was a name you like. It's gotten, obviously, natural gas exposure, so different story than what's been happening on the crude side. Don't know if you still like it or if there's a few other names that kind of jump out to you right now as good investments.
Yeah, Kelly, we love Cabot on the natural gas side. I think that's a no-brainer if you want natural gas exposure. If you want more oil exposure, there's two that I'd really turn your attention toward. One is WPX. WPX, this is a name we put out a very bullish note last Friday on, and our main thesis was they have $1.5 billion of midstream value. And we highlighted that, laid that all out, and said you take that out of its valuation, you have the E&P business, or the oil and gas business, left trading at around 4 times 2020 EV to EBITDA. That's a whole turn cheaper than your average Permian peer set out there. And these guys have a superior asset position, depth of inventory, and really a superior management team at the end of the day.
And you also like Whiting Petroleum?
Yep, love Whiting. I was reviewing my notes on this one this morning. I'm about to go meet up with these guys in the Midwest, take them around, see investors. And this was, to me, this is where you go if you want that oil exposure. They're 83% liquids, oil or NGLs. That's about a 20 percentage point increase over your average oil and gas name. So you get that great oil exposure. These guys, again, trade around 4 times EV to EBITDA, despite $100 million plus of free cash flow slated for this year and a great oil growth trajectory out front.
All right, we'll see. It's interesting, like you said, the investors are still pretty bearish, pretty cautious, even as oil prices have turned around. Mike, you were tough on lift today, Seaport. Man, that
was my buddy Mike Ward in the transport. And yeah, you gotta love that guy coming out and a hot IPO and putting a sell rating on it.
Slapping
so that's what we do at Seaport. We love it.
Yeah. Good stuff, Mike. Thanks for joining me.